Snipers, you have to see what's happening in the Bitcoin price. This is a 1 a.m. update, but an emergency update. Josh and I felt the need to get on this live stream for a few different reasons. And let's just talk about what's happening right now. Bitcoin's daily candle currently fully detached away from the previous weekly open at 21,000 US dollars, a major support level. Is this a sign of concern? Well, something that's more of a sign of concern is the Bitcoin against Tesla chart giving us an early indication right now as it's breaking new consolidation lows. The last time this happened, notice what happened to Bitcoin. It actually caused Bitcoin to dump from the $30,000 level to the $20,000 level. But not only that, snipers, I apologize for not mentioning this puzzle piece on my video 6 hours ago. And that is the fact that on the Bitcoin CME futures chart, we actually have a gap that just formed, and this gap is at 21,160. So for the bulls, there's a very high chance this daily candle right now could potentially come back towards 21,160. But let's ask ourselves a question. Do we expect that to be the final push to the upside before a potential test of the $20,000 level, the most significant support level? This is the 2018 previous all-time high and the current monthly open, a significant level for the rest of this month. Josh actually redid his whole chart today and spent hours, and he has a lot to share with you guys. But this is an important update because Bitcoin right now, below the $21,000 level, we talked about the Adam and Eve patterning being fully unconfirmed if we broke below 21,000 US dollars. So we have to take that bullish market structure off the table. And at this point, if Bitcoin does come knock on this door, we all know the rule. When you knock on a door multiple times, we've already knocked on it once, we broke through it this first time. So we can consider this door already being knocked on about 4 times, a fifth knock on this door, a potential likelihood that the door opens and we could see further downside. And that's showing here on the Bitcoin to Tesla chart already selling off. It is the weekend. Anything can happen. We have to take everything with a grain of salt. The markets are the most manipulated on the weekend. But for those that have long positions right now, there's still a chance Bitcoin comes up to fill this CME gap at 21,165 with this daily candle. But that doesn't mean that it's a confirmation of upside. That just means in the immediate short term, there's a potential we come to fill this. So these are bearish and bullish puzzle pieces currently on the table. Bitcoin right now at 20,500, it is testing hot waters, because if we come down to test this 2018 previous all-time high, we could expect a lot of volatility. And for those that understand Bollinger Bands, one thing that we know is that when Bitcoin starts to test the resistance of a Bollinger Band, that's typically when we start to see volatility. Could this be the start of an extremely volatile move? Because just notice how when we trended at 30,000 and we started to test the resistance of the Bollinger Bands, that was the start of the volatile move to the downside. CPI numbers come out on July 13th. There's a couple ways this could play out. What if we see a dump before CPI numbers come out, and then we see a pump if CPI numbers come out good? But the other scenario is that Bitcoin forms a third high or low here, CPI numbers come out, and then if they come out, let's say, good, we could see a pump from here and not form further lows. There's a lot to talk about today, Josh. I want you to go straight into your chart because you spent so much time on it. And then we'll take some questions from the live audience. This is a 1 a.m. live stream. Smash the like button for the YouTube algorithm if you support these live streams. We'll take questions from the live audience. Billy, CHNZ, all of you guys still here on the live stream at 1 a.m. We appreciate you guys. We'll take questions in just a second. Josh, go ahead and share your screen. Talk about what you have on your charts now, as you've updated them, spending hours on that. I'm going to go ahead and switch to your screen here. But certainly,
right, cool.
An emergency.
So, thank you. By the way, that was great analysis. So what we're essentially looking at right now is, these key horizontal white lines. Essentially, those are what have the most weekly confluence. And on top of that, these green lines, these are the starts of each bull and bear market cycle. So, I don't want to have to repeat anything because we've talked about this part before, but yeah, you know, basically if you measure the distance between these two, we're definitely due for another bull market, within the foreseeable future, right? I'm not saying we don't have more downside to go. We could very, very well wick, to 10,000 or below, just quickly and momentarily, I would say, before continuing up. But speaking of the bottom, we also have this very thick white line right here, or sorry, in this case, yellow. And I made it yellow because it's like gold. As long as we follow the yellow brick road or follow the money, follow, in this case, the bottom, we'll at least have a great indication of a potential bottom. And so, as you can see right here, it kind of just goes all the way back up right over here. But also, what happens whenever you reach a destination? You don't sit there and have a cup of coffee, dude. You literally immediately turn back around. And that's what we're seeing right here with this thick yellow line down here. I'll explain these kind of rainbow lines here in a second. But this thick yellow line has always served as the bottom during the asset price's history. The only time it didn't is for about 7 weeks down here in March 2020. That was the only time. And then it quickly found support on it, double bottom, and then there we go. So that's one of the things I'm looking at, is the fact that I believe if we're not at a bottom, we're very close to a bottom. Given these rainbow lines that I'm going to talk about here in a little bit, we could see some further downside at around that, $10,000 level. But let's just hope that we don't get there. Now, these rainbow lines, they basically serve as very, very, significant support and resistance levels. Because back in 2018, when the price dumped, and this was the all-time high, this whole right-hand side of the chart didn't even exist. This was uncharted territory. And so if you take on the weekly chart, which is what we're looking at right now, the candle high down and touch it to the candle body of the first candle it touches, it will create in this uncharted territory back in the day. It's very interesting to see where these lines end up. So if we just look and zoom in, you'll see that they've perfectly called the bottom and top of all the weekly market structures. You can't even make this stuff up. Look how this calls this seriously perfectly, all the way down to calling it all the way down to the exact top. So if I zoom out, look at this. It literally calls the exact top, minus the wicks, because this is a large time frame. And so with a large time frame like a week, I just wanted to be conservative, and not do the wicks. But essentially, look at this, called the top exactly. Look at this. Look at all these touches and all this confluence. I mean, it really is crazy. And so just to see where some of this price action ended up, if you look at these lines. But not only that, though, if we come down to our current price action, once again, we're on the weekly time frame. I mean, it's even called our, because nothing's perfect, you have to give it, it's basically a little bit of give or take, but essentially you'll be able to see that it's called nearly the exact bottom and top of where we are now, our support and resistance. And so when you go down into the smaller time frames, I've been really liking the 8-hour recently, because it gives me more information. The interesting thing is, look, it even called, before we had this dump here, it called the support and resistance here as well. And this is all the way from 2018, these lines are. There's a setting on TradingView, you can just right click. I remember when Naeem showed me the settings and extend right line and all that. So now that we've explained that, let's kind of zoom in here and give like a prediction of what we think might be possible in the near immediate short term.
I have something to say, Josh. If you look at the spider lines where we've currently bottomed at 17,600, those spider lines have been very accurate for the bottom specifically. You can go back, you don't have to do it, but I noticed for the bottoms, they've always hit a spider line, and you can see the current bottom was right in the middle of two spider lines. And so what if we come below that yellow line and then we come to that yellow spider line down around 16,500?
Yeah, it's totally possible. We have them down all the way to 10,000, yeah. And it's, these are incredibly accurate. Now, everyone draws, basically a lot of people ask me about these lines. They're basically just trend lines, and they just have a lot of monthly. They just have a lot of confluence. In fact, the most confluence. They might be the most single important lines you could possibly have on a Bitcoin chart. Um, but what I was going to say though is that essentially at the same time, as far as like the prediction, right? Like, let's go back into what we were going to talk about with that. So, as we all know, the price goes up and down. And so a lot of people ask me about these lines. They're just trend lines, and everyone draws them differently. But I literally just zoned out and I examined the market structure and all of this. And it's just crazy how it all lines up. It really is nuts. So once again, going back into the immediate short-term price action. So for those that were on the previous live stream, we totally called this top. This is almost like a triple top here. 1, 2, 3. And the rainbow lines are actually at a slight incline. So it calls these candle tops and bottoms as well. And so I'm just looking for the most confluence when I'm doing these lines. But essentially, right now, we called this dump. We told everyone if they just go back, don't go long right here. And this is before I even had these lines drawn on this chart. It's just sometimes you can just tell. But the whole thing is yeah, we're experiencing a dump. I'm personally gearing up for a long. I'm not in a long position yet, but I'm just going to see how far that this drops. And then once I see confirmation of the bottom, because I'm not going to buy the dip. Everyone always says, buy the dip, buy the dip. Well, the problem with that is what happens when you buy the dip and it just keeps dipping, right? It's not a good situation to be in, right? And so the way to avoid that is instead of buying the dip, we're waiting for the reversal. And so very, very important stuff, guys. If I was going to enter a trade relatively soon, I've got a bunch of screens pulled up. So like, this is just the 8 hour, right? But I've got like basically 7 minute. I really like the 7 minute time frame. I really like the 4 hour. I really like some of these other ones as well. You always got to have this whiteboard. Naeem and I used to whiteboard so much stuff out back in the penthouse days in Hollywood. It was crazy. But the whole point is, yeah, like I would basically go here on the 7 minute if I was going to enter a trade. Really, I already took profits from my short because I figured that, we're due for a reversal here before too long, but I just want to monitor the situation. So I've made a lot of money on the short that I was in. And yeah, that's basically what I wanted to say. Just wait for the reversal. And last thing real quick, though, if you don't mind, of course, is that essentially I'm going to be waiting for around the monthly open to go long. Somewhere between the monthly open and this 20,000, really it's 19,500 on the Bitstamp chart, but somewhere around this area right here is where I'm going to be looking to take a long. Potentially. I'm not just going to blindly limit order in. I'm going to wait for a confirmation on the bottom, wait for the reversal, and then I'm going to go in. And I'm going to ride it up, So please continue.
Yeah,
I'll go ahead and stop sharing.
If that's going to be a bottom, then we can immediately now, let's not do the Binance USDT pairing because that's obviously been manipulated with zero free trading. But if we look at volume, we can get an idea of where this bottom is going to come in. So far, 15-minute more sell pressure than buy pressure, 5-minute more sell pressure than buy pressure. Look at the 3-minute chart. You get this large spike of institutional sell pressure and then no institutions coming in to buy that. So still lots of sellers. Looks like retail, though, is buying up this dip. I mean, you can see the ground is fertile with retail, but obviously the institutions are the ones controlling the major moves here. And so that, to me, says that there's certainly a potential. And what would actually be the case, there's two ways this is going to play out. So if we bottom out, and let's say those that believe, and thank you so much for mentioning that we have the most unbiased analysis. I see Cali Crop Doc says we have unbiased analysis. I'm extremely unbiased when I analyze the charts for you guys. And the reason I'm able to do that is I've continuously dollar cost averaged into Bitcoin for the last 5 years. But on top of that, I short altcoins when Bitcoin is in a downtrend and in a bear market. And so I'm open to both scenarios because you can make money on both ends. That's just what it's like to be a day trader. And what would be interesting is the one way this could play out is we come and we find support at the previous resistance of the symmetrical triangle, right? 1, 2, 3 times it acted as resistance, and then we broke out, and now we're coming down. Garden variety market behavior, totally expected to test the previous resistance as support, and then we could see a potential opportunity of a long position here as long as the volume justifies it, and then we could potentially see another wave to the upside. But the other way this could play out is the way that it played out here when we came up, we broke out of the symmetrical triangle, very similar to the symmetrical triangle we're in right now, right? So we break out, we come down, we test it as support. Even if you take a long position right there, you still will do well because that's on margin and on leverage, right? Nice 2 to 3% move. But then we start to lose steam, and then eventually we see that push down. So that, I think, could be the other way this plays out. We find some support here. Maybe we come back up and we test this new weekly open right around 20,800, maybe even up to the previous weekly open around 21,000. And if we don't see volume, if we do not see momentum, if CPI numbers come out, because this is around July 13th, and they come out month over month, increased inflation, equity markets sell off, then maybe we see that same fractal play out where we lose that steam and we start to sell off after finding minor support here. And then, of course, that wouldn't be the best case scenario, where we have to start looking at those downside targets, 17,200 being the first major downside target here based on the snipers' major support and resistance levels. We haven't yet tested 17,204, so I think we could expect a reaction there. But we did clear out the order books close to that level, down to 17,600. So, another potential scenario on the table is we slice right through this range since order books are already cleared here, and we come straight down to 13,970. So that's why I think it's super important right now that we monitor this price action. We monitor the potential bounce here that we're most likely going to get at this monthly open in the 2018 previous all-time high. Because if we're not getting volume that justifies this move completing its fractal to the upside, where if we look at market structure and we were to just take the base, the target does take us above 24,000 US dollars. I think that would be the most concerning scenario, if that were to fail. So I think it's interesting, though, that they left the CME gap here. This was a very big puzzle piece. There's CME gaps at 28,000. We still have an unfilled CME gap down around the $18,000 level. But we haven't seen any CME gaps in this range. This is the first time we got a CME gap here. I think this matters more for the people that are day trading, not for the macro, because this daily candle that we currently have could certainly come up to at least just fill that CME gap. I think that's a highly likely scenario. Tomorrow, if we don't fill the CME gap, there's potential we never come down to fill the CME gap, and that we see this gap as something that we'll have to continue to monitor. I don't think there'll be another CME gap so close to these two gaps, though. So that's why I have a high degree of confidence that will come up at least to test 21,600 at some point in this market session. And I think that that's very plausible. And I say that because the DXY did close a bearish daily candle for Friday. We are up right now in futures markets, but this is the most manipulated time, low volume. And so we can very well see the DXY still show some weakness into this daily candle. So the next 24 hours are extremely important, but more importantly, July 13th is extremely important. So I think we have to understand, what is the playbook here? What are the institutions planning to do before the CPI numbers come out? Whether the CPI coming out is good or bad, I think we have to monitor what equity markets are doing, because if we do see that pullback for the S&P 500 before CPI numbers come out to the monthly open, I think there's more of a likelihood that we pump from the CPI numbers, because if we're going to front run it with a dump, I think the most likely scenario is the opposite of what happens over the next 3 days. If we pump over the next 3 days before CPI numbers come out, then maybe it's the opposite. We dump when CPI news comes out, which is what happened over the last few CPI releases. So it's going to be interesting to see here what's going on. Bruno says, I want to start trading against you and looking forward to the gains. Well, that's funny because, Josh and I sometimes trade against each other, and not at the same price levels, but Like, for example, I've been long since 18,600, and Josh took a short position at 22,000. And so, we were pretty opposite on those trades, but at different price points, which, I mean, that's why it's called margin trading, right? You trade the marginal moves. And let's see. More Money says Kevin O'Leary on why he's bullish on Polygon. When I met Kevin O'Leary a month ago at Bitcoin Conference 2022 and did an interview with him, he wasn't the most knowledgeable person. Kevin O'Leary isn't somebody to trust in the crypto industry. He was against crypto when I started YouTube back in 2017. He was talking against crypto. And then in 2020 and 2021, he flipped his stance and became bullish. So don't listen to Kevin O'Leary. He's just some guy on Shark Tank. I mean,
if you want to buy some treasury bonds, listen to Kevin O'Leary.
Exactly. So, Bruno, don't even worry about that.
Go listen to Peter Schiff,
Oh, man. Well, he's been right with this current dump, but, eventually the permables get wiped out.
Anyone could be right with this current dump, even Stevie Ray, or what's his name? Ray Charles, I mean. Even Ray Charles could see this dump, and he's blind.
I think the most concerning thing right now to me is this Bitcoin to Tesla chart. I mean, just look at this on the weekly. That's just looking really ugly, right? Like, look at these two major downside candles for the last 2 weeks. I mean, this is a very strong bearish confirmation. And now you can see we are currently breaking the consolidation low. So this is already dumping. This is already in free fall. Isn't that crazy? I mean, that
could be a leading indicator.
100% leading indicator
as to what Bitcoin itself is going to do. And ironically enough, I was telling Naeem, before this, that some people think that Elon Musk is Satoshi Nakamoto because he receives a lot of government funding, and also, he did PayPal, so he's interested in the payment system side of things. And Tesla and Bitcoin are the two assets that always go up over time, right? So I thought that was pretty funny. I'm not saying he is, but, on the internet, we'll say anything, right?
Yeah, I love your fundamental knowledge, Josh. That's one thing I respect a lot about you, and I've learned so much from you on fundamentals. As much as you're a student of mine, one of the best students, I'm also a student of yours, man. You understand fundamentals to another degree, because I know you always want to protect your wealth and your assets, and so you truly pay attention to fundamentals. But I'm glad you're now getting to technicals. Another concern right now that I have is the Ethereum to US dollar price completely detached away from the previous weekly open at 11.97. But more importantly, this daily candle is really breaking down from 11.65. We can see it clear here on the shorter time frames. We're already getting those snipers confirmations here with the hourly and 4-hour candle confirmations below 11.65. And so we've already opened up the door for Ethereum to come down to 909 US dollars. And so that to me is very concerning. It's almost as if Ethereum is currently selling off. Another interesting thing, since we're pretty freestyle on this live stream, midnight for me, or it's actually like almost 2 a.m. for me. I'm going to keep it freestyle. Is the fact that Ethereum hasn't been able to get anywhere close to its 2018 previous all-time high. We broke down from 1440, and now we're having a bearish flag form below the previous all-time high. That's not a good puzzle piece, because let's say Ethereum is leading Bitcoin right now when it comes to market structure. I mean, that's pretty much saying that Bitcoin's going to be ready here soon to come down here and do the same thing Ethereum has done and detach completely away from this major support at 20,000 US dollars. So I'm just throwing out the bearish puzzle pieces because Bitcoin is red. It's at 20,500, below 21,000 right now, down 1.58%. Literally, the Bitcoin to Tesla chart's currently completely selling off. So I have to address the bulls when it's necessary, but I also have to address the bears when it's necessary. And so, there are some concerning puzzle pieces on the table. I'll say one positive puzzle piece, though, is let's talk about the higher low formation and that potential scenario. Let's say Bitcoin forms a higher low at 20,000, right? That would actually show confluence, because usually when Bitcoin's coming down, we'll see altcoins also lose confidence and sell off. And so that would assume the Ethereum to Bitcoin chart sells off. There could be some confluence here where the Ethereum to Bitcoin chart comes to 53,500 Satoshis. That's the major level. Matter of fact, let's delete these green lines. These are previous weekly opens on our charts because they're not significant anymore. And Bitcoin's previous weekly open right now is right around 19,300. I'll add that on our chart for our video tomorrow. But let's delete the green line off the chart because that doesn't matter as much. And let's just pay attention to the important levels, right? The volume levels are the red. The yellow here is the previous 2018 cycle all-time highs. So let's keep all of these on the chart. And here's what I want to mention. There's some confluence with market structure here with Ethereum to US dollar price potentially coming down to test 53,500 Satoshis. And if that happens, this is a major support. This downside move could show confluence with Bitcoin doing the exact same thing here to test 20,000 once again to form, like the Ethereum to Bitcoin chart, a higher low. And so I think it's interesting to me right now that the 2018 previous all-time high, the monthly open, is also showing confluence with a point of interest here where we form a higher low. And that's exactly what could happen here to the Ethereum to Bitcoin chart. It's not often that you see market structure so similar with a altcoin against Bitcoin pairing and Bitcoin, especially the second largest altcoin. So I think that's one positive puzzle piece, saying that we might not have to completely dump. You know, let's say we do come down to 20,000 before CPI numbers come out, we dump. Maybe that's what we want to see, Josh, right? Like we front run the CPI report by dumping down, testing 20,000, keeping people on the edge. And it would make sense because if CPI comes out month over month up from last month, inflation's increasing, then it's a great place for Bitcoin to dump. But it's also a great way to keep the bears and the bulls on the edge by taking it down to form this higher low. And then by the CPI numbers coming out on Wednesday, we can see that bounce from this level where Ethereum to Bitcoin will bounce at 53,500 Satoshis, and then it'll start to strengthen against Bitcoin, and then it'll be able to reconquer 1165. But, you know, I don't like the fact that Ethereum right now is below 1165. I don't like the fact that you mentioned the final destination scenario, Josh. Well, I mean, let's talk about the weekly candle that just closed for Bitcoin. Tested the 200-week moving average, found resistance, right? Is this the last time that we test the 200-week before potential dump? Similar to what happened to Meta when it crashed below its 200-week moving average. It came up, it tested its 200-week moving average, and then it's never seen that since, right? So, you know, I don't like to see that rejection of the 200-week moving average of this last weekly candle closing.
Yeah, that's a huge moving average. It's like even the 200-day moving average, that's like a huge time frame. So the 200-week moving average, that's really saying something. You know?
Where is the 200-day moving average? 36,500 right now.
200-day right there in red.
Yeah, you know, here's one thing that we're going to have to expect at some point or another. It doesn't have to happen this month. It doesn't have to happen this week, but it could happen this month or this week. But in every bear market, I've been through many of them, there's always going to be that headline of Bitcoin for the first time in over a year testing its 200-day moving average. And we haven't seen that headline yet. We didn't see the headline when we first tested it in March of 2021. And it makes sense because that was the first time we tested it. So, you know, the news headlines wouldn't be as interesting to talk about that. But I know every bear market, there's at one point or another, and we'll actually go back and look at some of these previous bear markets. I think it was really during this time frame right here where we saw those headlines when Bitcoin capitulated and then it went back above its 200-day moving average, and it hadn't been there for a very long time before that we started to see the headlines. I call it the bear market headline indicator, right? We have to expect some of these headlines at some point or another, like, oh, this asset's now testing the 200-day moving average. Obviously, that's only going to happen once we start to see things get better in the macro and with the global geo-economic situation right now. You know, I don't see that headline coming anytime soon, but at some point we'll expect that. Maybe it's going to take this 200-day moving average to come down a bit more before we get that headline. But, all on-chain indicators stating that we've seen a capitulation. I think a lot of people understand the fact that Bitcoin is potentially close to a bottom, but that's why we're focused on the immediate short term right now. And so, Bitcoin right now clearly heading towards this major support here at 20,000 US dollars. This is going to be a make it or break it in the immediate short term. The best case scenario is that we hold up and then we form that higher low. And then by CPI numbers coming out on Wednesday, we can get a better idea of what the overall direction is going to be into the next few weeks. What are your thoughts on that, Josh?
Yeah, I guess my closing thoughts on it is basically, I have a feeling that I'm going to be waking up at 4 a.m. tonight, checking my phone and entering a long on my phone. So, and if not, then we might have to bleed out a couple more days, and then that's when I enter the long. But I'm not going to go long until I see confirmation of the bottom. That I can tell you for sure.
I think that's a very plausible scenario.
Because here's the thing, guys. If you want to gamble, go to the casino. This is not gambling. This is about being smart with your money.
Absolutely. And let's see here. Do you have your big Discord channel like back in 2018? Discord.gg/profits. I believe the link is in the description. No, I took it off the description. Let's see. Isaac says, I entered a short at 20,500. Alp asks me, what is your CPI estimate? Well, here's what I'm thinking about CPI. I think with CPI numbers, let's say we get a 8 to 9% number. That is not going to be too good for the markets. I think that would definitely indicate some sort of a sell-off or more hesitation, more sideways price action. I mean, we're seeing record numbers of shorts with institutions. But let's say we get 10%, a double-digit CPI number. I think that's the worst case scenario. We get a 10%, a double-digit inflation number. By the way, it's 1 a.m. here. Give me a break. If we get a 10% inflation number, that's going to be detrimental to the markets. I think if we get 6% to 5%, I think that's very unlikely. I think people are expecting a little bit more of around the 7 to 8% range, similar to what we saw last month. And I think that would be the most expected scenario. The worst case scenario is to see something double digit. I mean, that would be ridiculous. I mean, now you're talking hyperinflation, because that's going to cause the Feds to even possibly have an emergency meeting to raise interest rates, right? So to see something like 10% would be detrimental. I mean, that's when things could get ugly. But anything below that, I think that's what the markets are expecting, and it's better to get what the markets are expecting than to get something unexpected. A big drop in inflation, we could have very well bottomed Bitcoin out. I mean, there's tons of indicators on chain showing that Bitcoin's ready to bottom. At some point or another, it will bottom. Doesn't mean it's now, but it could be. And I think that a lot of that has to do with the fundamentals, because remember, technical analysis, 80% psychology, 10% technicals, and 10% fundamentals. And so that's why you'll see the technicals react on the fundamentals. But psychology-wise, if you look at the crypto fear and greed index, I think it's over 20. It's been slowly increasing. We're seeing a little bit of a let-off on fear. But those aren't the strongest indicators, so I don't want to go too far into that. But thank you for mentioning that. AZ says CPI should be higher. Possibly the peak prices just started going down last week. SHNZ says the Great Reset. What do you think about the Great Reset, Josh? Do you believe in that?
Yeah, I mean, it's definitely happening around us, whether we want to believe it or not. It's kind of like what you said the other day, Naeem. It's like the Federal Reserve, even if you whether you hold on to your cash position or if you invest in real estate or Bitcoin or anything, they're going to find a way to suck out some of that money from you anyway, right? Regardless of what you do. So that's why portfolio diversification is very important.
Man, I'm looking at some 4D parts, Josh. This does not look good. Japan is up 1%, right? And so that puts the possibility that Bitcoin does come fill that CME gap that it just formed over the last 24 hours at 21,165 on the table. The fact that Japan is up, that's a positive leading indicator because Japan's ahead of the US. So we can look at Japan and predict how US equity markets are going to perform. But what I really don't like is China is down 1.89%, a little bit more of an extreme and to the downside, and they actually gap down. So it really makes this so undecided. My gosh, like what we're seeing here with China is just not looking good for this open. Another thing that's been interesting is Euro to USD. Man, it's almost like it's going to be at some point or another where $1 is going to be equivalent to €1. I mean, last time I went to Europe, that was definitely not the case. It hasn't been like that in a very long time. I mean, the last time that $1 was equivalent to €1 was back in 2002. So, my gosh, I mean, you'd always have the mindset, for especially millennials and Gen Z that the euro is stronger than the dollar, but right now it's not. This ain't a good puzzle piece. That's why it's red here. There's two very big bearish puzzle pieces in the macro. The DXY in price discovery and the Euro to USD chart, which is a great indicator of how markets are risk on or risk off. It predicted the bottom for Bitcoin in 2017 and 2020. The reversal of the Euro to USD predicted the bottom of risk on coming back into the mindset of institutions. But that's, right now, not the case. It's completely risk off. The euro is really getting hammered here. And so, NASDAQ's almost down 1% right now. I still think there's a high likelihood that we see maybe a nice push to the downside before the 9 a.m. bell rings for the equity markets, and then we'll see a nice pump. Because I have a pretty solid bias right now about the CME gap that it's going to get filled today. It's very odd to just see a CME gap form out of nowhere like this. A lot of times it will get filled. So for the short-term day traders, if you've got any positions around 21,165, expect the price to get back there by the intraday session just because of the CME gap. This is a pretty strong puzzle piece on the table right now. So I think that's one positive we can just put on the table here for the intraday traders. But Bitcoin right now close to test this major support. Very, very interesting time here. Josh, do you want to take some questions from the live audience?
Yeah, for sure. And then it's 11 here as well, so I'll probably have to hop soon. But this is a question from Joplot. It says, for the beginners, how can you tell when there is confirmation, quote unquote, at the bottom? Well, it's not confirmation at the bottom. It's confirmation of a bottom, a local bottom to be exact. And so what we're primarily looking for is a specific candle structure. And we're looking for confluence. We're looking for this specific candle formation at a specific, targeted area of confluence. Maybe that's an intersection of where a moving average meets a well-known support line. Maybe that's, on the confluence of this pattern, which we're seeing here on the retest of that line of resistance through that symmetrical triangle. There's different levels. 20,000, that's a very iconic, 2018 all-time high type of support resistance line. Hopefully it doesn't become resistance. But that's what we're looking for, is a specific candle structure. Usually it's like a wick, and it's very fast, and it gets eaten right back up, and then it consistently makes, higher lows and higher lows. So, as you begin your trading journey, you'll kind of just, over time, you'll just be like, oh yeah, duh, that's the local bottom. Usually it's some type of manipulation also involved. That's hence the scam wick, and then being bought up very fast and then consistently making those higher lows. Let's see what else do we have. DXY is juiced 100%, man. The Federal Reserve's money printer, go Bird. Bitcoin is drunk. Well, I hope Bitcoin's not drunk because it's only 12 years old. 12 to 13 years old, that's why it acts like a 13-year-old. So I hope it's not drunk. When do you think the dump is coming? Well, I think we've been dumping this whole time. You know, it spends a little bit of time in the green and a lot in the red, a little bit of time in the green and a lot in the red. So I don't know what you mean by that, because we're, you know, until we're consistently making higher lows for an extended period of time, you know, I wouldn't trust it. Let's see. What trusted exchanges do you use to trade futures? I usually just only do like perpetual, like derivative contracts. For that, I just use Bybit. Let's see. What altcoin do you think will survive in the bear market? I would say maybe the US dollar. You know, that's a really big shit coin. Because the word fiat comes from the word which means forced in Latin, meaning that people are forced to use that currency. Trust me, I keep a copy of the Creature from Jekyll Island on my desk, literally right now, every single day, to remind me about fractional reserve banking and all that stuff going on. How low can BTC go? I don't think you want to even ask that question. But no, honestly, I mean, we're looking at 20,000, 10,000, you know, God forbid, 5 to 3,000. Hopefully we don't get down that low. The last spider line I have is at around 10,000. Let's see. Do you think the pi cycle bottom top indicator will hold true? We'll see. We'll see. Because everything has been invalidated, right? Like we're breaking all the rules right now. Going like usually Bitcoin never goes back to retest its previous all-time high. But we're breaking all types of rules. So I'm not really looking at one indicator. I'm just taking things one day at a time, identifying my overall environment, and just, you know, trading based off market structure, price action / volume, and overall trend. That's really where it's at. And then, you know, having some amazing technical analysis never hurt either. What do I think about ApeCoin? Oh man, you could not pay me enough money to invest into ApeCoin. Not that I have anything against it. I just personally, I'm not a meme coin speculator. I'm like a technology investor. That's really what I am, you know. The utility, man, utility. Even though I'm sure ApeCoin does have some utility. And I'm not like talking smack or anything. You know, one of my business partners created, you know, the technology behind the NFT, so I'm not like hating or anything. I'm just always more of a token crypto guy myself. Even though ApeCoin is a token, but it's, you know, within the NFT community. What do you think about, let's see, if it goes below 10K, all we could do is pray. Well, unless you have a short, and then you'll be hoping that we go to 10K. I personally am not like that. I am a Bitcoin bull. It just seems like every time, like we just had a big pump. I mean, really all you have to do is go back in the past live streams. And we've pretty much been calling every single move on this channel before it happens. You know, and that's long and short. It just seems like there's been a lot of short opportunities recently because we're in a bear market. Imagine that. I'm selling my car if we go to 10K. Well, I hope you're selling it to buy more Bitcoin, not selling it because you have to pay bills because the price went so low. The big difference. But yeah.
I really appreciate your time, Josh. Everyone, subscribe to Josh's YouTube channel. The link is in the description below. I just taught him how to do his live stream, so when he feels the need, he's going to be posting his own videos, and we cannot wait for that. And subscribe to this channel if you've yet to do so, as we have the best cryptocurrency technical analysis on the internet ever since 2017. And if you haven't watched my interview with the founder of Ethereum, Charles Hoskinson, we had an amazing time with him in Wyoming, Josh and I both. that is also on my YouTube landing page, youtube.com/snipers. That's why we call you guys snipers, because this is the OG snipers YouTube channel. You can't even get usernames on YouTube anymore, but since I've had this channel since 2006, we do have a great username. And with that being said, guys, I know, Josh, it's 11 p.m. for you, it's 2 a.m. for me, and I appreciate each and every one of you tuned in the channel. We had to get this video update out to you guys. There were a couple puzzle pieces that I didn't discuss in my video earlier today. I appreciate you guys tuning in. I'm going to go ahead and rehab my ankle because I unknowingly sprained it in a trampoline park, and I've been ice bathing it, infrared therapy, compression therapy, I mean, the red light therapy, the whole 9 yards. And so I'm going to get to that. And with that, we appreciate you guys tuned into the channel. Thank you guys. And smash the like button for the YouTube algorithm before you get off this video. I see, let's see, Caslin Oro says you need to do live sessions. It's good for the YouTube algorithm to rank fast. Well, that's good information to know. RT says, how low can Bitcoin go? Well, it's all dependent on the macro events. And I think at this point, it's quite clear, you know, we get this monthly open test here, 2018 previous all-time high. And then at that point, what do you have to do? You go into the smaller time frames, monitor volume, and then you can start determining where to take that long position. I like that you're looking for a long position, Josh. I might be up for the Asian market open in less than an hour here and maybe get into that long position. Oh, this could be a front run right now for the Asian market open, actually. I mean, that usually is what happens when we're dumping right before 3 a.m. Eastern Standard Time, where Asian market open is. So this could be a front run to, you know, long, you know, because I'm sure there are people that need to, you know, get into some sort of position. And just like 9 a.m. Eastern Standard Time for the equity markets open is a volatile time, it's the same for the Asian market session. So let's see what happens. Maybe Asia pumps us up to fill that CME gap. Trask says, love these updates. Thank you, gentlemen. Freedom says, money doesn't sleep. Get some rest. Thought you were about to show us the ankle bracelet. Nope. Thank you, Billy. Thank you, James. Thank you, Michael. We love you all. And until next time, Josh and I are out. Snipers.